far away. Good morning, everyone. I'm Bonnie. I'm the new General Manager of Future Generation, and this, as many of you may already know, is Lee, our Chief Investment Officer. I've been at Future Generation for just over 3 months, and what attracted me to this role is its truly unique hybrid model. It provides positive, strong investment returns for shareholders while simultaneously doing good for our communities. When Future Generation was founded 11 years ago, its goal was to prove that investment can be a force for good, and we believe that it has and continues to deliver that. So before I hand over to Lee, I'm going to ask for a show of hands. Hands up, who here is a Future Generation shareholder? That's wonderful. While a number of you are taking advantage of this opportunity already, we believe that after hearing our presentation today, many more of you will be interested to hear more. So I hand over to Lee to tell you more about it from an investment perspective.
Thanks, Bonnie. So Future Generation has 2 objectives. Our primary objective is to do well for our shareholders, and our secondary objective is to do good, and in particular to support some not-for-profits that predominantly help young Australians. And there's a few of them in the room next door who you may have seen before, and Bonnie's going to mention a bit later on. We run 2 listed investment companies, Future Generation Australia, which invests with Australian fund managers, and Future Generation Global, which invests with global fund managers. They're very generous, these fund managers. They work for us for free. They don't charge any management fees or performance fees to our shareholders. And in fact, many of our service providers and suppliers also work for free. In total, that has saved shareholders $175 million so far. And it's because of their generosity we're able to donate 1% of assets each year to great causes without having any impact on shareholder returns. And so far we've donated $100 million. The difference between those 2 numbers, $75 million, remains within the investment vehicles. It's there for shareholders in terms of better investment performance and dividends over time. And so the fee advantage model that we offer compounds over time. So how do we invest? Well, our primary objective, our investment objective, is to deliver market or better returns, but with reduced volatility or risk. And the way we do that is through diversification. We invest and find what we think are the best fund managers in Australia and from around the world. Some of them are actually going to be on a panel a bit later on. We've got Eli Griffiths, Antipodes, and GCQ, I think, this afternoon, coming to talk to you. So you'll see how good they are. Some may be less familiar to you. For example, Holowesco Partners is a Bahamas-based hedge fund. They couldn't make it today. And they're only open to institutional investors. In fact, many of our funds aren't open to retail investors. So our first layer of diversification is by manager. They operate in different styles and they have different strategies. Long short, long only, large cap, small cap, systematic. They're very diversified. Now, diversification is always important in investing, but it's particularly important when uncertainty is elevated. And you've heard from some of my colleagues earlier on that there's a few things going on in the world which elevate uncertainty. Macroeconomic risks from growth, inflation, geopolitical risks from wars over energy, and also disruption risk from things like artificial intelligence. What's sometimes overlooked is that that level of uncertainty gets exacerbated when markets become concentrated. So this slide, and you may have to bear with me for a second, but this slide shows the industries that have dominated the 10 largest companies listed on world exchanges going back 100 years by decade. So to give you some context, in the 20 years up to 1940, it was all about industrial companies, particularly in US industrial companies like US Steel, General Electric, the Union Pacific Company. In the 20 years up to 1970, it was all about consumer companies, and in particular, the car companies, Chrysler, General Motors, Ford. In 1990, if you recall, 5 of the 10 largest companies in the world were Japanese banks. And after periods of crisis, energy tends to feature after World War II, after the Suez Crisis and the Iranian Revolution. But since the year 2000, it's all been about technology. And I want to make 2 points about this chart. The first is market leadership is transitory. The companies that are the biggest companies today are rarely the same ones in a few years' time. They represent historic success. They're yesterday's winners. And the second thing is technology has dominated world markets for an unusually long period of time and to an unprecedented extent. 8 of the 10 largest companies in the world at the moment are technology companies. Now, this problem becomes more serious when markets get more concentrated. Most indices are market cap weighted, the All Ordinaries, the MSCI, the S&P, FTSE, many others. And what they tend to do is concentrate risk into those large companies rather than diversify away from it. Now, this problem in the world has been getting worse over the last decade or so. If you rewind 10 years, the 10 largest companies in the world made up around 10% of the global index. So of all of the companies in the world, 10 made up 10% of the value of the index. Fast forward to today, and that number's tripled nearly. Nearly a third of the world's index value is made up by 10 companies, 8 of which are technology companies. So Future Generation Global is exposed to those companies. They are great companies, but our exposure is much less. Our risks and our bets are more diversified. We spread our risk. In Australia, similar story. In fact, in the ASX, the 10 largest companies make up nearly half the value of the total index. And 5 of those companies are financials, the big 4 banks and Macquarie. Again, Future Generation Australia is exposed to those, but its exposure is much less. Bets are more diversified. The risk is more diversified. So diversification is really the key to our performance. Now, Future Generation wasn't designed to chase hot markets. It wasn't designed to be traded around uncertainty. It was designed specifically for moments of uncertainty, when the outlook is uncertain. And it's that stability that has enabled the board of Future Generation to increase the fully franked dividends that are paid every year for the last 7 years. And in fact, this year we've also announced a 3-cent per share fully franked special dividend, which gets paid in a couple of months' time. When you add up all of this year's dividends and all the franking credits associated with them, the yield on Future Generation Global is over 10%. Same story for Future Generation Australia. That stability has enabled the board to announce increased dividends every year for the last 10 years. And that rolled up dividend number for this year is approaching 8%. We think that those dividends are sustainable and we can continue this trajectory because both companies have really strong balance sheets. In the case of Future Generation Global, it's got over 8 years' worth of dividend coverage on the balance sheet, and it's over 6 years for Future Generation Australia. So Future Generation is for investors who care about the protection that diversification can offer in times of uncertainty. They value fully franked income that's growing over time. And they want to see us contribute to society by helping great causes in Australia. And for that, I'm going to hand back to Bonnie.
So when Future Generation was founded, its goal was to achieve $100 million in social impact investment by 2030. We achieved this goal last year, 5 years ahead of schedule, for 2 main reasons. 1, the performance of the funds has been strong, and 2, we've grown our funds under management ahead of target. As we grow our funds under management, our social impact investment also grows. Impressively, last year we provided close to $13 million in social impact investment across Australia. Today, in the foyer, we have a couple of our charities here, and if you'd like to learn more about our social impact partners, feel free to have a conversation with them. We have Kids Express, who use the creative modalities to support children who've suffered severe trauma. We have Raise, who work with children through a really crucial part of adolescence to keep them engaged with their education and engaged with the community at large. We have Giant Steps, who support profoundly autistic children and young adults in a really informative, caring and educative environment. And we have the Australian Children's and Music Foundation, who use music as the tool to engage with some of our country's most disengaged youth in juvenile detention centres and across communities across Australia. So they're truly wonderful partners operating in delivering really strong social impact outcomes for Australia. Furthermore, if you buy your shares through CommSec, they will refund your brokerage in full. So, ladies and gentlemen, I said earlier that this is a truly unique investment opportunity. You have access to some of the best fund managers in the market while simultaneously doing good for our communities at absolutely no cost to the shareholder return. I invite you to take a closer look, and Lee and I will be available to answer any of the questions you may have regarding Future Generation. Thank you very much.
Thank you.